Hello to our audience around the world. Thanks for joining us for a webinar on travel payments and the broader question of why building customer confidence is central to success for leisure travel brands today. We'll be sharing exclusive consumer research about customer behavior, and we'll also give you practical, actionable advice for your business. Today's webinar is presented by WEX, the payment specialist. I'm Sean O'Neill, editor of Tnooz in Philadelphia. I'm joined by Gene Quinn, CEO of Tnooz in Connecticut. Leading our presentation today is Lee Jackson, head of European New Business at WEX Europe. He's joining us from London. With him is guest presenter Martin Alcock, director, the Travel Trade Consultancy. We'll be hearing from them in a moment. Just a bit of housekeeping, 3 things. First, within about a day's time, Tnooz will email you a video replay of today's webinar. You'll also get the slides by email. You can share these with your colleagues. There's going to be a lot of detail with the in-depth consumer research. We'll also send you a link to a report where you can understand the sourcing of where the data is that we're presenting today. Second, we'll have a question and answer session at the end. When you have a question at any time in the next hour, please use the box on your GoToWebinar dashboard. Type in your question. I'll read the questions and then ask them of our presenters. You can put a question in there now if you already have one. And third and last, we're asking some poll questions of the audience today to help tailor our presentation and be able to better match with the type of audience we have. So please answer the questions using your GoToWebinar tool. Our first poll is, where are you located? Are you in North America today, in Europe, Latin America, or Asia Pacific? Of course, with the time difference, we will be a little bit more represented in Europe than in other areas. But we understand that many people will be watching the replay and reviewing the slides afterwards who have signed up for this. We thank everyone who's joining us wherever they are in the world. About 2/3 of you are in Europe, which makes the most sense given the nature of today's topic. About a quarter of you are in North America. And for those of you joining us in Asia Pacific, thank you so much this evening. One other question that we have before we begin is, which industry segment do you represent? Please tell us which business segment you're in. Looks about like 1/3 of you are consultants or in professional services. About a quarter of you are agencies, TMCs, corporate buyers. About 10% are suppliers. About 18% are tech providers, and 20% are others. Whatever segment that you're in, you can see the results there on your screen. We do have information for all of you in today's presentation. We think all of you will be able to benefit. I'm now going to hand this over to Lee Jackson to start.
Thank you, Sean. Good morning, good afternoon, everyone, depending on where you are in the world. First of all, as a means of a welcome, WEX is a specialist in solutions for the travel industry. And so therefore it's really important to our business to understand what consumer appetite is, how it is affected going forward, and how that will then play out in terms of impacting payment strategy for our clients in travel businesses. So for anyone that's been hibernating for the last 6 months, you may have missed the fact that there has been a historic decision by the British people in that they have decided that the United Kingdom will leave the European Union. And so the immediate impact for WEX really is that we want to understand. We regularly run research of the travel industry. We did so in May, and given what it's probably fair to say was a relatively unexpected outcome of that referendum, what we wanted to know is what was the impact in terms of people's confidence with regards to their travel plans. So what I want to cover over the next 20 minutes or so is what have been the areas of impact for Brexit. I want to look at the WEX Whitepaper, our objectives and the findings, and then balance that off against what we know about consumer confidence, and also how that has played out in terms of impacting exchange rates. I'll be joined then by Martin Alcock, as Sean mentioned. Martin's going to look at whatever our white paper has said that whatever consumers' intentions are. Martin's going to talk about what is actually happening in terms of them looking, them booking, and actually travelling. And then finally, and important for many of the people in this webinar, is what does that actually mean for payments. So let's move on to the next slide. So a little bit of background in terms of prior to the white paper and prior to the referendum. If you look at the UK travel industry leading into 2016 and leading up to that referendum, it was relatively buoyant. The UK industry is projected to grow by 4% a year up to 2017, according to Focusrite statistics. And yet the industry is facing some pretty well-known challenges in terms of terrorist attacks and also the refugee crisis in Europe. But despite those challenges, it was a relatively buoyant outlook going into the referendum. Come on to the next slide. We should also consider the fact that the UK is the largest market in Europe with almost 60 billion of spend, and for many of the people in the digital travel space on this webinar, it's also second only to Scandinavia in terms of its adoption of online bookings. So a really healthy picture, and a healthy picture in terms of the consumer appetite to book going into the referendum. And also worth mentioning that as the UK appetite for online adoption slows, that we see now Germany, Italy and Spain starting to increase in terms of consumer adoption there. So for both the UK and Europe, leading into 2016, relatively buoyant time ahead prior to this referendum. So the objectives of the white paper, if we could look at the next slide, please, Sean. So confidence is absolutely key to success in the travel industry, and what we want to know is how has that confidence been impacted by the referendum. So in terms of the frequency of travel, how much are people looking to spend? To what extent are they looking to travel long haul? Because long haul can be much more profitable for some businesses. And what are the popular destinations? And ultimately, what are the factors, including Brexit, that are actually impacting travel plans for the consumer? And as I mentioned before, we ran that research in May. Following the unexpected result, we wanted to see how those results have been impacted by that decision by the British people. So let's have a look at the first area, which is the frequency of travel and the extent to which people are looking to spend. So in terms of frequency of travel, just to explain the table on the right, on the right-hand side, you have the percentage of people that were planning 2 trips abroad when we ran the survey in May, and then on the left-hand column, you've got the impact when we ran the survey in August. So in terms of those people who were planning to take 2 trips abroad overseas, then that we got a small decline of 3%. More telling, and we'll come on to this as we look at consumer confidence, a little later, more telling is that those people who were looking to travel 3 or more times overseas has declined by 10%. And there's some of the travel businesses on this webinar will know, 20 years ago, 20, 30 years ago, you could pretty much run a profitable travel business on the back of someone just taking a summer holiday. For many people, those times are gone, and really you need people to be taking second, third, fourth holidays in order to reach profitability. So, and that decline of 10% could be quite telling for some people. And then in terms of spend, a decline of 11% in terms of how much people were looking to spend between May and then August following the referendum. So if we could look at the next area, which is the appetite to travel long haul, this to an extent continues along the same theme in terms of frequency of travel. So when we ran the research in May, we had across the age groups, we had 46% of consumers saying that they were looking to plan at least one long-haul trip in the next 12 months. The data on the right in the table shows the breakdown by age group in terms of their propensity to take that trip. Across all the age groups, what you've got is a 5 percentage points increase in terms of following Brexit, people looking to take a long-haul trip. So a slight increase in appetite to go long-haul. However, that is balanced against a slight decrease in the number of trips planned, which has dropped from 2.1 to 1.9, and again matches what we had on the previous slide, which may be that people are just being a little bit cautious in terms of how many times they will travel, and again we'll come back to that by looking at the consumer confidence index that we've got coming up later in the survey. We can take the next slide, Sean, and have a look at where people are travelling. So for those based in Europe, I think it's pretty well documented now that Spain is getting pretty full. It was prior to the referendum in that we had 44% of people looking to visit Spain, and in the August survey that's increased a little bit more to 47%. That actually means that you've got 25% of people saying that they're actually concerned with how busy and overcrowded Spain may be as people turn to Spain as a safe haven. Equally, you've got Portugal and Italy in both surveys continuing to do well in the top 10 as somewhere safe and local to travel to. One thing that we have seen since May is an increasing appetite for Greece. That may be due to people looking for greater value. Again, it's a Euro destination, but there may be a perception of greater value in Greece following the survey. And Croatia pops up as a destination to watch, really. Again, a 2-hour flight from the UK, non-Euro, and perceived as a safe place to visit. So where are people not going to? Can we have a look, Sean? So one of the things that's been announced today by Monarch Airlines is that they are putting their program now to Egypt. So I guess no surprise to most people on the call, Egypt, Tunisia and Turkey are the top 3 destinations that people do not intend to visit. Really all Middle Eastern and North African countries dominate this list, along with any country really where there has been any kind of negative activity towards tourists that have been publicised in the UK press. They fall on that list. What is apparent is that Brexit is not keeping consumers away from European destinations as we stand at the moment due to exchange rates, which we will come on to shortly. So let's just have a look at the overall factors that are impacting where people travel to, Sean. So top of the list, where people were travelling to pre and post Brexit, you've got 29% in terms of concern on security over the last 12 months, and then in terms of people looking forward, that's increased to 37%. So security remains really the biggest issue for people post the referendum. People's economic situation, well, almost 30% of people have been concerned over the last 12 months as to their own job security and personal finance. That decreases a little bit going forward over the next 12 months. It's the second issue, but it's positive news in that is slightly declined going forward. Exchange rates pretty flat, and maybe that is because whatever has happened as a result of Brexit, from a consumer perspective, they haven't really seen that, in that at the time that this was run in August, the impact on exchange rates would not be felt, certainly from a summer holiday point of view. So if we were to run the white paper now, we might see more concern in terms of exchange rates. I think what we would also point to there is concerns over Brexit. No real difference in terms of pre the vote and post the vote, and relatively low in comparison to security and personal finance. So what we want to do is really balance that against the wider consumer confidence index, which is run by GfK. Can we get that next slide, Sean? Because this is quite telling in terms of interpreting the results of our white paper versus what's going on in terms of consumer confidence. So leading up to the referendum, the index was positive, as you can see here. Fell down to 0, and then leading up to the referendum had fallen to a minus figure, and then absolutely plummeted south after the immediate results of the referendum. However, what you will see is that it then recovered significantly going up to September. And okay, it's fallen a little bit in October through some negative press regarding what the potential fallout of Brexit may be. But even then, it's still looking pretty good in terms of consumer confidence. And I think, Martin, you've got something you wanted to mention.
Yeah, I'd just add to that, Lee, actually. This is a chart that shows confidence over the last 12 months. But I think if you extrapolated that back by another 3 or 4 years, what you actually see is where we are now is roughly where we were back in 2012 in the UK. And that's certainly remembered as a fairly positive year on the whole. And the other thing that jumps out is when you map UK confidence against the OECD figures, which is an organisation of developed nations, you'll see that actually over the last 12 months we've been significantly ahead, and what this has done is brought us back roughly in line with where those other countries are. So it's certainly nothing to be concerned about in my view.
Yeah. And if we move on to the next slide, Sean, then that I think gives some pointers in terms of what we found from the research. So first of all, and Martin will cover this shortly after our next poll, that in terms of people's own financial situation and their willingness to book, which we're going to come on to, that is relatively positive still at the moment. So people are happy with their personal finance situation, but in terms of the general economic situation, although their view has got better, it's still minus in terms of how it's been and how it will be. And that could well point to why we do see, as a result of the Brexit decision, some reluctance to plan ahead and take that second, third, or fourth trip. So that may well point towards that. Certainly, major purchase index, that is positive. People are booking at the moment, as Martin will cover shortly. We talked about the impact of Brexit, and one of the areas where we have seen an immediate impact is with regards the strength of the pound. We look at this next slide. So if you clearly looking at June, you see a catastrophic drop, or potentially catastrophic, in terms of the scale of that drop over such a short period of time. If you look just above June, but if we move straight on to the next slide, so that was a significant drop from something like 1.4 to 1.2. This charts the value of the pound versus the euro over the last 5 years, and I guess what's important here is that although that the steepness of the drop following the Brexit decision was pretty much unprecedented, the level of the pound versus the euro and where it's at now is not unprecedented in recent times, and therefore that does show some, I think, some reasons for optimism in terms of European travel. Only 3 years ago, we still had a relatively buoyant travel economy as far as Europe was concerned, although it was more expensive as it is now. The UK consumer was still very, very willing to travel to European destinations, and balanced against those security concerns, then that certainly points towards that continuing to be the case right now. If we look at the impact versus the US dollar, again, an absolute drop at the time of following the decision with the referendum. Guess what's a little bit different as far as the US is concerned? For those travelling to the US, the impact of the exchange rate will be relatively unprecedented over the past 5 years, because it is quite some time since we've seen the pound's value against the dollar being so low. We haven't really seen that borne out from the survey at the moment, because of course people have not had a great deal of time to travel at the point that we're on the survey, but we may see that going forward for those people who have travelled to the US in recent months and not got quite so much value as they had seen before. So that really is the impact that we saw from the white paper, and balanced against the other pointers in terms of currency and consumer confidence. Martin shortly is going to talk about how that has manifested itself in terms of people researching holidays and booking and actually travelling. But I think before we do that, Sean, you wanted to run another poll, please?
Yes, that's right. This is a poll for travel sellers only. If you're in the tech business, please stay away, because we want to have a sense of where travel sellers are thinking, what their mood is. What is your current booking volume like? So please let us know. Are you on plan, above plan, below plan? And we also want to thank people who have asked questions already using the question box on their tool. We still have room for more questions. So and there's been a lot of data that's gone through. If anyone wants to ask a question, feel free to type it in at any time. It looks like about a large majority of you feel like they're on plan with their current booking volume, which is great news to hear. About a third of you are below plan, and about 10% are above plan. So I would like to bring Martin Alcock on as director of the Travel Trade Consultancy. You were speaking a moment ago. Are those results surprising to you, or is that in line with your expectations based on this research? And maybe you could also tell us a little bit about your organization as well.
Yeah, absolutely. Good morning, stroke afternoon, everyone. I think, look, the initial thing I read from that is, firstly, great news and great planning by the vast majority of people. I guess it really depends how aggressive and ambitious your plan was, and we'll come on to that in a second, actually. Just quickly before I get into that, my organisation, the Travel Trade Consultancy, we're 100% focused on advising travel companies, and we only work with travel companies, and we do a range of things. It's mainly in the regulatory space, but that also leads into assistance with things like payment technology and insurance and actually budgeting and outsourcing on the finances side as well. One of the things that we do as a result of the work is we see a lot of in-house financial data that is being prepared for management purposes. So it's not public information. It's not being prepared to tell a story to the markets necessarily. It is the genuine belief of those management teams. And we see a lot of that data as a result of the work we're doing on helping them to work with regulators or complete application forms. But so one of the things that we do is collate all of that and crunch it and try to work out some trends and things. And so in September, which coincided with the UK licensing renewal process, we looked at about 70 companies, and this is a range of travel companies from very small startups all the way up to some of the biggest companies in the UK. And what we found, and if we can just move to the first slide of mine, what we found is that on average, those tour operators are projecting a whopping increase over the next 12 months of 22%. Now that's an average, which I think, you know, if you overlay that with your poll results just now, and you know, that's a phenomenal story. But you know, I think what that tells me is tour operators, I think, are generally very optimistic, as you have to be when you're running a business where there's so much outside of your control. I mean, you know, Lee touched on some of those areas earlier where we've had in Europe terrorism on our doorstep. We've had political instability. We've had a migrant crisis. You could throw in a few others. You know, Zika virus is impacting bookings. We're seeing in a year where there's an Olympics or a major sporting event like the European Championships, that has a big impact on consumer habits, and it makes it very difficult to plan. So I think you could be forgiven for thinking that tour operators would have lost some of that optimism, but this exercise we completed in September definitely shows that they are still an optimistic bunch, which I think is certainly we see as a big positive. Could move to the next slide, please. What we wanted to do was just expand a little bit on the WEX Whitepaper. The WEX Whitepaper was based on data, respondents to surveys. It was really about consumer intention pre and post Brexit. What we thought we'd do is try and take that on a bit. Just it's a few months since that now. What are the changes since that data was collated? But also just to make sure or to test whether those intentions are translating into actual actions. So we look at this as an index really of are they looking, are they booking, and are they actually traveling? So if we start by are they looking, and we move to the next slide. Now what we did is take some basic Google keyword search data. We looked at consumer search history. Never something I would recommend. It can take you into dark places looking at people's internet search history. But what we found is a trend. And so I think the important thing on this chart is that you look at the shape, you can see that this is over the previous 3 calendar years. The search trend is very consistent, actually. And those 3 data points we've pulled out there show start of October in 14, 15, and 16. And it's an almost straight line, which shows that, you know, certainly since the referendum, there's been virtually no impact on search volumes on a shape perspective. I think one thing we have seen, though, and it's circled there, is a blip around June, and that's a very definite data point that corresponds directly with the referendum. And what you see is a very short, sharp dip in that month, something that wasn't there at the same point 12 months earlier. But you can then see that it very quickly afterwards recovers.
Martin, could I jump in here for a second? Could you clarify for our listeners about who is in this search data survey for the Google Analytics, which country?
Yeah, absolutely. This is the UK focused data, so it's based on UK consumer searches.
I think it's also Yeah, it's also worth mentioning here, Martin, that if you look at how the consumers researching holidays rebounded relatively quickly following that shock of the Brexit decision, that reflects what generally happens with Google search, in that as you see the impact of terrorist activity in resorts, generally within a 5-day to a week period, the searching will rebound almost to previous levels. After that initial dip. Not a surprise.
Yeah, not a surprise. And I think that comes down to when you live on a small island that's crowded and it rains 80% of the time. You know, people want to get away and they want to get on holiday, and it just underlines that resilience of holidays, really. But again, make the point that, like with the WEX data, this is about intention. What we wanted to see was, is that intention translating into action? So if you look at the next slide. So this data comes from GfK, and it's the GfK Leisure Monitor Survey. Again, it's a UK-focused, or this particular survey is a UK-focused survey, although GfK do look at data across Europe. And it's broken down into seasons. And so we started looking at the summer 2016 season. Now that season runs to the end of October, so it's literally just finished a few days ago. This is the data up to the end of September. So typically, you're 95%, maybe even a shade more than 95% of the way there by the end of September. So it is pretty comprehensive for the summer 2016 season. First thing that jumped out at me on this data is that, Lee talked right at the start of the session about back in 2015, the Focusrite data was predicting 4 to 5% growth for the year. And if you look at bookings ended exactly 4% up based on the prior year. So firstly, well done, Focusrite, for their accuracy. But also, I think it tells you that it was a reasonably strong season. Revenue numbers were down a bit, and I think we'll get into the reasons on why that might be in a moment. But certainly, there's been an increase in bookings. Now, just jump back to Brexit for a moment. Of course, the vast majority of these holidays would have been booked way before the referendum, and so you wouldn't expect people to necessarily cancel holidays as a result of something like that. So to an extent, it's not really anything you can read into that from a Brexit point of view. In fact, there was a good private eye article that went viral a month or so ago that said, one of the big issues here is Brexit hasn't actually happened yet, and it put it slightly more agricultural terms. It said the shit hasn't hit the fan because the fans haven't actually been turned on at this stage.
Actually, if you look at the decision from the High Court today, Martin, I think you'll probably find that we don't quite know when the fan can be turned on. To be honest with you, neither does the British government.
Yeah, good
well, I think also there's also the issue of some of the currency hedges that some of the companies have put in place, and it takes some time for those to run out. So that it's still going to be some level of uncertainty for some time. Is that right, Martin and Lee?
Yeah, good point, absolutely. I think when you get into this data, I think what's interesting is if you look at those key trends, so although the bookings were generally up 4%, I think the reason that revenue figure might be down is because what we are seeing inside the data is a big increase in short breaks, and by short breaks we're talking 6 nights or less. The other thing we're seeing is this is based on the summer that's just ending, very strong performance in family holidays. Again, we've seen the Spain, Balearics, and Greece double-digit growth, which is backed up by those intentions figures in the WEX report. And then, no surprises that Turkey and Egypt did actually have those big drops that we expected. If we move on to the next slide, and we look at the following 2 seasons. So the winter season, which really starts from the 1st of November, by the end of September, your typical holiday company would be around about 40% booked for that season. So it's a good chunk of bookings, but there's still a long way to go, I suppose. But what we're seeing there is that bookings are up 17% at this stage, which starts to look, well, it's not too far away from some of those tour operator figures we came out with when we did our research. It maybe makes me think our clients aren't quite as insane as I maybe thought they were when I first saw the 22% figure. But again, when you dig into the detail and the key trends within that 17% growth, shorter durations is something that's come up again, 30% up for bookings of 6 nights or less, and a real big increase in self-catering. The shorter duration stuff, I wonder if this is, it's one of two things. I think it's either a response to one of the trends Lee pointed out, where people are looking to take more holidays per year, and is this a shift in just human culture where we want to take more short breaks over the course of our working year, or is it something else? Is it consumers trading down where maybe last year they would have taken a 7 or 10 night holiday? They're looking for something cheaper, because inevitably you will see that in the pricing data that 6 nights is a cheaper holiday. I think the self-catering point is interesting as well, because what we saw during the financial crisis 2007, 2008 was a big push towards all-inclusive holidays. For obvious reasons, consumers want to know exactly what they're in for at the point they book their holiday. They want no surprises. They want to know everything's covered. They don't really want to be taking a risk on the currency swings. Well, what seems to be happening certainly for winter, the coming winter season, is that it's a big swing back to self-catering. And again, you could read into what that might be driving that. It could be increased confidence. It could be a perception that self-catering is cheaper and you can eat tins of beans while you're on your holidays. I'm not quite sure what's going on there. I think if we then look at the next summer season, you can see that this is at the end of this September, bookings for the following summer season. Tour operators wouldn't expect to have sold more than around 15% of next summer's holidays. It's not really till January where we see a real traditional spike in bookings. Pretty much after, as soon as we've had Christmas, Boxing Day, there's a big spike in bookings. So probably not what you might say is statistically relevant at this point, but certainly useful to see a trend. And what we're seeing there is that bookings are 5% up. So again, there's a confidence there for people to commit to what is a fairly large part of their annual spending, and they're doing it quite a long way out at this stage. You've got to have a bit of confidence to be able to do that. So that's a positive. Again, if you dig into that 5% and you look at that booking mix, there's a big increase in family bookings. Again, it's a very confident statement, I think. But again, we see this short break thing, 58% short breaks up. I mean, that's across season just gone, winter coming, and next summer we're seeing this rise in short breaks. So it's definitely a trend. So if we just move on to the next slide and just sum that up, really, I think where we are, what we're seeing is within consumers traveling, so the third element of our index. Now, there's nothing really happened that would be so extreme as to cause people to cancel their holidays. And what this data is, this comes from the UK's Office of National Statistics, and it's based on passenger surveys, and it looks at actual numbers of consumers travelling rather than bookings or intention to travel. So it's actual throughput from the airports in effect. Again, this is UK outbound. What that's telling us is that not only was August a very strong month based on the previous August, and you can see the figure up there was a 6% improvement based on the previous year. But if you look over the last 12 months and the total number of departures over the 12-month period, it was about 7% ahead of the previous year. So again, when all this is taken together, I think we look at it as a very positive set of data. Not only were, on this particular slide, the booking numbers ahead, you'll also see that the actual expenditure figures were something like 9% up over the last 12 months, which is a really strong result. So if we just move on to the next slide. And we just sum that up, really. I think that where we're standing looking at this and conversations we have both with our tour operator clients, but also the data that we're seeing, I think there are reasons to be cheerful and some reasons to be fearful. In the positive column, there are plenty of inquiries. The booking numbers are holding up. The travel numbers are holding up. Winter and summer on relatively small volumes, obviously, at this stage, but both strong starts, and I think that's very positive. I think you go back to the consumer confidence and say that it is down, but it's not too down. As I say, we're broadly in line with the rest of the developed nations. I think oil prices is an interesting point, though, and Sean, you mentioned this before. I think we've had a long period of very low oil prices, and as you say, companies, airlines in particular, are hedged and tied into those low prices for the foreseeable future, and hopefully that will translate into lower oil prices, lower ticket fares. What we've seen certainly in the UK and European space is those low oil prices have been recycled into increases in capacity, and that has had an impact on reducing those flight prices. So from a tour operator point of view, we hope that for at least the next season we'll still see the availability of those cheap fares. Just some dark clouds on the horizon, though. I think the airline capacity, what we've seen in UK airlines particularly, is a lot of angst over the Brexit decision. We've seen some airlines talk about slashing some of that capacity that they were talking about adding on. We've also seen some airlines looking at maybe rebasing themselves in other European territories. And if that comes to fruition and we do see some of that capacity threatened, then that will have the converse effect, and we may well see some increases in price. I think the currency is just a perennial problem. I think the way things look right now, anecdotally, we talk about UK, when the euro rate is down below 120, you do start to see consumers thinking twice. Now, summer 2000 and summer just gone. Obviously, it's too late for people to get out of bookings, but the danger is people come back from those holidays that are maybe 20% more expensive than they were the previous year. Maybe they start to think twice about the bookings and making commitments at this stage when the rate is so low. And I think that US dollar rate is it's unprecedented. And I guess the slight positive spin on that is when you go back to some of that data we've just talked about, long haul did look very strong. And so USA as a destination for UK consumers is still very strong and is performing well despite that. So reasons to be positive. I guess just end on that note, though. We don't know what Brexit will look like. Lee mentioned there's been a bit more of a movement on the political front today. I think there's a lot more for that to play out. There's a lot of talk of hard Brexit and soft Brexit, and I think partly nobody really knows where we'll end up. There's a whole load of stakeholders to be managed, and I guess we could well see some big swings in either direction over the coming months. So certainly one to watch. So if I finish on that note and hand back to Sean to do another poll.
Yes, before we're about to do question time, but before we do that, we have one last poll for our travel sellers to try to get the pulse. If everyone could please vote whether you are adjusting your payments strategy in the next year. If you're a travel seller, please vote of whether you are adjusting your payment strategy, if you're planning to spend more, planning to spend less, or not making any changes. And then we'll get into some of the questions. If you have any questions based on the talk today, I know it's been a lot of information. Feel free to ask a question now and by typing one into the GoToWebinar box, and we'll ask it of our panelists. Thanks to those who have already submitted their questions. So it looks like about a third of our listeners today are planning to spend less. About 50% say no changes, and 17% are planning to spend more in terms of spending for marketing and staff costs. Lee and Martin, do you have any quick response to that before we go into the questions? Does that seem, what's your sense of that?
Well, yeah, I think that's interesting. It does look like it's having an impact. And look, spending on marketing and staff costs are the two big costs that most travel companies have. And to cut that back is a reflection of, I suppose, some drop in confidence. I feel like it's a fairly natural response for most industries. It's slightly surprising that tour operators have done that, just given what we said about how optimistic they normally are. But it's a sensible, rational business decision, so certainly stacks up.
All right, we have some questions from the audience. One thing from Mr. Chatterjee is, and this is for Lee because Martin has sort of just already given his sort of hedged opinion on it. In your opinion, will Brexit have any real impact on leisure travel out of the UK in the long run?
I think, like many people before me, after a couple of weeks ago, similar answers to that question, Sean, which is that we don't have a crystal ball. This is completely unprecedented. I think that I would make a couple of points. The first one is that, as Martin has relayed, we have a relatively buoyant business in terms of the UK travel industry as things stand right now. And secondly, I think if you compare that to the recession of 2007, 2008, and you look at the kind of drops that we saw in airline passenger numbers and tour operator carryings at that time, this is nowhere near that point. So, the challenge for everyone, probably reflected in that poll that you've just run, is the business uncertainty. So, as matters stand right now, people are travelling, people are booking. The extent to which that they will commit, and whether they're committing to a second, third, or fourth holiday, that's where the challenge is. But right now they're travelling. Who knows? We've got 2 years of negotiations, and as of today, we don't even know whether they can press the button on Brexit.
And if I could just make one other point, we talked a lot around the political drivers, some of the cost drivers, but what I always cling on to working in the travel space, and it's a little anecdote. I had a family barbecue in August, which is supposed to be the peak of the UK summer season, and it rained non-stop all day long. And I think never underestimate the UK citizens' desire for sunshine, and that is, I think, always the underlying driver. Travel is very resilient. We need to get away. We need our holidays.
So I think one of the areas that we wanted to cover as part of this webinar really was, what does all that mean in terms of payments and payment strategy? So first of all, what is the consumer most concerned about right now? Regardless of Brexit, what they're concerned about is their security, and that is ever changing in the modern world. And therefore, in terms of the impact on payments, then the payments industry needs to support the travel industry in the fact that they need to respond very, very quickly to change in destination requirement from the consumer. And therefore, if we take the WEX virtual payment product, then that helps to support easier contracting and allows you to extend your supplier base and access new destinations as you need to, and do that very, very quickly. And of course, what's important from that payment solution is that if you want to extend supplier take-up and access new suppliers, you've got to make it very, very easy for them. And if that means you provide that solution by email, you provide it even for some smaller properties by fax, then doing so is going to help you provide the new destinations that your customers require very, very quickly in the current climate. I think the second area, if we move on to the next slide, please, Sean, is that what we have seen is that the real impact from the uncertainty is an impact on business confidence. And how does that play out? Well, it plays out in terms of the willingness of suppliers to provide credit lines and to manage that credit control, concerns around that. And then it also, from what we've seen, means that the consumer has some concerns. And if you want them to commit to more holidays, then there's probably going to be need for more incentives and low deposit campaigns in order to keep the consumer booking and willing to commit to holidays. All of that points back to the fact that there is a cash flow challenge, and therefore your payment solutions need to provide some assistance with that and provide credit, and therefore credit is vital as part of your payment strategy. And then finally, if we take this last slide, Sean, finally, as we saw from those graphs, that currency fluctuation is pretty much unprecedented in terms of the dollar and the euro. But what it does point to is the fact that you absolutely have to manage for those situations, and you have to be able to hedge against those situations, and therefore your payment solution means that you need to be able to manage your treasury function for those areas where you've got material capacity in your business, and therefore multiple currencies is vital, really, in terms of any payment solution. So I guess the final wrap up from me would be that the industry is still buoyant as it stands at the moment. In terms of how that impacts payments, then really what travel companies need to be looking at is easy acceptance in order to access new suppliers, credit to address the ongoing business uncertainty, and the ability to be able to pay in multiple currencies to manage currency fluctuation and business risk. And with that, I will hand back to Sean.
And so we have a poll question about adjusting your payment strategy in the next 12 months. For travel sellers only, please. Yes or no? Will you be adjusting your payment strategy in the next year? I think this will be a telling sort of result for the people who are voting today. We thank everyone. It looks like about a third of you will be adjusting your strategy, but about 2/3 of you will not, which sort of dovetails in line with what Lee and Martin have been discussing today on the call. I think with that, we'll go into questions. So one of the things you mentioned earlier was about security as a broad theme. If travel suppliers are looking to take on new areas, be able to give customers alternatives to places that they may previously have gone, like Egypt and Turkey, what is it about the payment strategy? You mentioned about virtual payments. How can that dovetail with their overall tactics?
Yeah, the way that dovetails really, Sean, is that it's about making it easy for the supplier to accept terms, and also, let's be clear here, we're not just talking about accept terms over a period of a 3-month negotiation. When we're talking about the security concerns and the events that we've seen, means that people are having to switch their plans very, very quickly. So if you're talking to a supplier for the first time, and you want to access their capacity very quickly, then what you don't want to be doing is having a conversation with them in terms of credit risk, because you're a new customer to them, and therefore being able to provide them with a virtual card solution whereby it's the issuer of that card that is providing the credit, and then equally providing them a payment tool that they could accept within their current kind of point of sale infrastructure, means that you're much more likely to be able to bring those suppliers on as quickly as you need them to meet the consumer demand.
Is there any seasonality factor that may influence some of the numbers? I mean, you've talked about how the appropriate way to look at these figures is the comparison years from in earlier times in order to give a bit of perspective. If you could sort of talk about whether there's a seasonality.
Yeah, well, a huge amount of seasonality both in bookings and departures, but different profiles, if you like. So the tradition over here in the UK is the bookings pretty much drop to about their lowest on roughly Christmas Eve, and then Boxing Day everybody sits around stuffed full off their Christmas dinner, and they pick up the computers and they start looking and booking from that point. And what you see is January is always, and you would have seen it on that chart there, but January is always a huge booking month, and some companies can expect to do 20-25% of their year's bookings in that 1 month. So that's really, when you talk about next summer's next summer's bookings, and I said at the end of September, we're only about 15% of those holidays have been sold. Well, by the end of January, we'll be fairly substantially beyond that, a good 40 to 50% of the way there. And it's really at that stage then you can really start to draw conclusions around what that means for the overall season. And that drives a lot of different behaviors. So, for example, there are lots of companies all competing. You can think of the holidays that they're selling as almost a wasting stock, in the same way as a greengrocer might be sitting on a load of stock of vegetables. And if they don't sell that stock and the departure dates pass, then they're no good anymore. So what you start to see is nervousness creeping in if the holiday bookings aren't coming through. And that's when you start seeing people discounting, and then other people compete against them and discount, and everybody trashes everybody else's price, and before you know where you are, you've got profit warnings from the big tour operators. So that's the real danger about this. But absolutely, it's seasonal, and that's a bit of a reflection of how that seasonality looks.
Joshua was asking, you just mentioned how the issuer of the virtual card is providing credit. Could you expand a little on how credit works when using virtual payments?
Yeah, I mean, ultimately, as the issuer takes on the responsibility for providing the credit to the travel company. So, typically an issuer will look over the business health of the travel company and make a decision as to the level of credit line that they can provide to that business. And then, just like if you look at your own consumer credit card, you will have a credit line applied to you. You will be able to make payments and transactions using your card until such point as you've reached the credit limit on your card. And in the same way, that is the way that a virtual credit account works, so that a credit line is agreed, it is applied to that account. Cards, certainly in the case of WEX Travel, we issue single-use cards for each individual payment transaction, so that it provides real one-on-one reconciliation benefit for the travel business, and also provides almost virtually eliminates fraud by taking that single-use approach. So you have multiple single-use cards being raised for each payment up to the point that you reach the credit line that has been applied.
Okay, we have a question from Arib. The consumer confidence looks to be going down, but travel inquiries seem to be going up. Is there any specific reason for such cross trends? Is consumer confidence not a great predictor?
It could be that people are depressed and they need a break. I don't know. It's always difficult to read these things. I mean, the other thing is there are a number of different people who put out consumer confidence indices. I think overall, traditionally, we've always seen it as a very resilient purchase, and it's from a UK point of view, people will cut back on buying things for the house. They'll cut back on buying new cars, but they'll rarely cut back on holiday spend. And I think that could be one answer to that.
I think it's also worth mentioning though that although it's going down, if you take that GfK index, although it has dipped in October and following, I think, quite a lot of press speculation in terms of the Brexit uncertainty, although it has dipped in October, it has only dipped to pre-Brexit levels. And if you take pre-Brexit booking activity prior to the referendum, then that was relatively buoyant. So yes, there's been a dip, but it is only a dip, and it's nowhere near what we saw immediately post the referendum.
Time is a factor, so we have one more question, please. Why is building consumer confidence central to success? And a related point to that is if people come to a travel supplier and say, in the past we've been interested in in Egypt, we've been interested in Turkey, but now we're very nervous about the security issues. Which way should you go as a travel seller? Should you try to persuade them to have confidence in those destinations, or does that undermine your credibility and you should be sort of encouraging new destinations? Is there any advice at that level?
Yeah, I think the comments I would make, it really depends on the traveller and who it is you're talking to. Let me give you an example. Egypt is as we said before, and Sharm el Sheikh particularly, which is the big sun and beach part of Egypt, is off limits to the UK actually. So there's an issue going on where the UK government has banned flights to that destination, and the big airlines and the big tour operators are pushing the government to allow them, and they haven't so far, and hence Monarch have pulled their whole schedule there. But actually, that's one part of Egypt, and if you're the kind of consumer who wants to go and do a particular type of holiday, like a historical, more cultural holiday, looking at the pyramids, looking at the cultural aspects of that destination, then you'll probably still go. And I think the people who aren't going to Sharm el Sheikh and are now going back to the Spanish Costas and the Balearics are the people who are buying on price and ultimately want a beach holiday. I think if you've got consumers who are coming and asking to do particularly, they're going to a destination for a particular reason, I think they'll still go, and I think they're probably the people who will see. They'll see beyond some of the headlines. If you've got riots in the central square, that doesn't mean that other parts of the country are off limits. I think there are different types of customer, I suppose. Does that answer the question?
It does answer the question. There are different types of customers, so the seller need to respond to that. Well, Martin, thank you for that. Lee, thank you for the presentation. Time is a factor, so we have to wrap up today's webinar. You will receive a video replay by email, and you will also receive the slides, so you can share those slides with your colleagues and review some of the details. If you like today's webinar, please let us know in our survey that we sent you. Thank you again for joining us, and we hope you have a good Friday and weekend.